Ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, shake that. Raise your hands up, raise them up.
Hello, everybody, and welcome to Wednesday's currency call presented by Forex Trading Asia. It is the 16th of March, and it is Wednesday. Thanks to everyone for joining us live from the LCMS Trading Club community as well. And if you are watching this call on YouTube a little bit later in the day, and you are looking to join in the live calls and also participate in the trading club as well, where we do share updates very frequently if there's any opportunities that are around in the markets, including equity markets as well, then please join the club via the Jindal Thai website. So we do have the pound and euro pound in focus today as the currency pairs. Kim Hong as well will be going through. There's a couple of things to go through. We've got the US later in the week on Thursday morning, so tomorrow morning, very early, 2 a.m. We've got the FOMC meeting, economic projections, and the interest rate decision. And then later on Thursday this week, we've also got the monetary policy and interest rate decision out of the UK as well. So those meetings and decisions for interest rates will both be previewed by Gim. And I'll be touching upon the US dollar index and also a little bit going on in regards to the stock movements. We do have some news out of the Ukraine-Russia situation with what looks to be some favorable outcomes from some meetings and some ongoing negotiations. But before we get into everything, I will just share and read out the risk disclaimer as well, as we will be sharing trade ideas. Any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. So just to get us kicked off, we've got Kim Hong here, currency strategist with LCMS Trades, previewing the FOMC meeting and the big interest rate decision out of the US and the pound UK interest rate decision as well. So over to you now, Gimme.
Okay, probably the most exciting, I would say, event for the month, okay, the FOMC, okay. So previously, the FOMC, what they did was they pretty much didn't do anything, okay, during the previous meeting, all right. But they sent out a message, okay, that pretty much confirms that there will be an interest rate hike during the March meeting, which is tomorrow, okay. And you know, the thing that they said that convinced us is pretty much this one line over here, okay. With inflation well above 2% and a strong labor market, the committee expects it will soon be appropriate to raise the target range for the federal funds rate, okay. So that pretty much you know, gives us the green light, okay, to really expect an interest rate hike by the Federal Reserve tomorrow during their meeting, okay. And other points that they made yesterday, not yesterday, sorry, during the previous meeting, okay, was that there's one point that says, I think that's it comes from Jerome Powell's during his testimony, during his press conference, okay. I think there's quite a bit of room to raise interest rates without threatening the labor market. So, you know, we can actually expect more interest rates coming in this year, okay? And at the same time, we can actually expect a bigger interest rate hike, okay? Bigger meaning like a 0.5% instead of 0.25%, okay? Although normally a 0.25% hike is considered one rate hike, okay? A 0.5% hike is, you know, unofficially considered two rate hikes, okay? Because, you know, it's like a default kind of setting that 0.25 is considered by the market, okay. It's widely considered as one interest rate hike by the market, okay, and then 0.5 will be considered two, all right. So this time round, all right, what can we expect from the FOMC? Okay, first of all, interest rate hike for sure, okay. But then the question is, will it be a 0.25% hike or a 0.5% hike? All right. Well, before this whole Russia-Ukraine tension started, okay, we can confidently, okay, expect a 0.5% rate hike. All right. Remember during the Powell's testimony, I actually mentioned that if the US employment figure, okay, specifically the employment change figure, were to turn out to be greater than 600,000, okay, implying that 600,000 jobs were being added for the month of February, okay, and inflation data, annual headline inflation were to turn out to be, somewhere close to or maybe even 8% or higher, okay, then we stand a chance. Okay, the Federal Reserve stand a chance to carry out a 0.5% rate hike. All right, but that was before this whole tension took place. Okay, but then now with this whole tension, ongoing war going on and things like that, and the latest update on that is that Russia and Ukraine will have another round of talk today on Wednesday. Okay, so not sure how it's going to turn out. All right, but the thing for sure is that this whole war has created tons and tons of uncertainty. Okay, has placed tons and tons of uncertainty into the economy, into the market, not just the Russia-Ukraine economy, okay, the global economy as well. Okay, so because of that, we are not so much confident than before, okay, to expect a 0.5% rate hike from the FOMC anymore. Okay, nonetheless, okay, what happens, okay, if the FOMC were to carry out a 0.5% rate hike? Now that it will not be a surprise. Okay, it will not be a strong surprise, like how the ECB delivered their whole hawkish tone recently. Okay, so it will not be a strong surprise, but it will still be a strong and firm stance from the central bank, from the Fed, from the FOMC. Okay, that despite the whole uncertainty caused by this whole war, the central bank itself, okay, still feels that the whole rise in inflation, the strong rise in inflation, and the positive outlook in the employment market in the US, okay, warrants a strong rate hike to begin with. Okay, to begin the whole rate hike cycle with a strong rate hike of 0.5%. Okay, so if a 0.5% rate hike were to take place tomorrow, okay, then we can expect the US dollar to strengthen, like really strengthen, and have quite, I would say, a sustainable move. Okay, but if it's just a 0.25% rate hike, the US dollar may very well strengthen, okay, but it may not be a sustainable one. Okay, that's the thing, because everyone is expecting a 0.25% rate hike coming in from the FOMC. Hence, there's no surprise over there. Okay, but of course, in the unlikely situation where the FOMC were to carry out no rate hike, okay, that will probably, okay, be bad for the US dollar. Hence, the US dollar will likely weaken. Okay, because as much as the uncertainty being injected by the the whole war goes, okay, a 0.25% rate hike is the minimum that the market, the public, okay, is actually expecting the FOMC to carry out, okay, in an attempt to tame this whole super crazy 40-year high inflation in the US. Okay, and it's really running very, very hot. All right, so if they were not to carry out any actions to actually tone it down in terms of rate hike, then it's not very good. Okay, it's not very good. It's definitely not very good for the US dollar. Okay, and quantitative easing wise, okay, keep in mind that bond purchases will end this month as well. Okay, so bond buying has ended. Will be ending, okay, this month. So there's not much to play with in terms of monetary policy tools for the Federal Reserve. Okay, and the most, I would say, effective, impactful one right now, okay, in terms of toning down inflation would be an interest rate hike. Okay, so 0.25% rate hike, USD may strengthen briefly, but may not be sustainable. A 0.5% rate hike would mean that the US dollar will strengthen and will likely be a sustained move. Okay, will be sustainable. whereas no change in rate hike, okay, then the US dollar is likely going to take a hit. Okay, now that will be a surprise. Okay, a no rate hike situation, okay, a no rate hike scenario will be the most impactful one out of the three. Okay, a 0.25 hike, a 0.5 hike, and a no rate hike. Okay, no rate hike will be the most impactful, and it will be negatively impactful on the US dollar. Okay, and then apart from this whole monetary policy decision, okay, keep in mind that the economic projection materials, the quarterly economic projection materials will be released as well. Okay, so we will, as usual, want to pay attention to the dot plot that will be released with the projection materials. Okay, with this whole hawkish expectation coming in from the FOMC members, okay, we can expect the dot plot, the dots in the dot plot to shift higher, okay, meaning more FOMC members, okay, will be expecting more rate hikes coming in for 2022, 2023, and even 2024, okay. Hence, we can expect the dots to shift higher and higher. Now, once again, okay, in an unlikely situation whereby the dots kind of like move lower, okay, now that will definitely be bad for the US dollar. Okay, that will definitely be a dovish tone sent by the FOMC. Although we don't know during the time of release, okay, of the projection materials, who actually projected the interest rate to, interest rate hike to be lesser than, previously, and things like that. Okay, eventually we will know once they start giving speeches and things like that and own up to, their actions. Okay, but still, okay, any shift downwards will be bad, will be negative for the US dollar. Okay, and actually, you know what, even if the dots were to remain unchanged, okay, that means no change in the shifting of dots were to take place, then that may actually prove to be, well, that may actually have some form of negativity in the US dollar. Okay, because like what I said right now, rate hikes is being expected from the FOMC. Okay, and if the members actually are not expecting more rate hikes coming in as compared to the previous released material, then that may be a sign, an early sign, okay, that the FOMC members may be expecting some stagnation of their hawkishness and things like that. All right, so pay attention to the dot plots as well. Okay, what we are expecting now is for the dots to be shifted upwards. In a scenario whereby the dots remains unchanged, okay, that may cause a bit of weakness in the US dollar. Okay, that may be some dovish tone sent out by the FOMC. And if the dots actually got shifted downwards, okay, then that will be negative for the US dollar. Okay, and of course, the economic projections material includes the economic indicators as well, such as inflation. So personally, I feel that inflation expectation will be revised upwards. As for GDP, now that's the interesting part. Okay, we will have to pay attention to the GDP expectation as well, especially for 2022. Okay, because of the ongoing war. Will the FOMC members expect economic growth in the US for 2022 to increase, okay, or to decrease, to expand or to contract? Okay, well, I wouldn't say contract, but to expand or to expand at a slower pace. Okay, if there is any downwards, if there's any downward revision in the economic growth projection for 2022, then that may not be that will definitely not be good for the US dollar. Okay, now think about it this way. The one technical term to use, to sum up this situation that may potentially happen is stagflation. Okay, if economic growth is not expected to expand faster, okay, or maybe even expected to contract, okay, to slow down, okay, then with the rising inflation, okay, this phenomena will be known as stagflation. Okay, a stagnant in economic growth while inflation carries on. Okay, hence stagflation. Okay, so this may be an early sign. Okay, the FOMC members' projection of the economic indicators will be an early sign to whether they suspect that stagflation can happen or not. Okay, and then of course there's another indicator that's important, is the unemployment rate. Okay, my take is that they will likely revise it lower. Okay, having more confidence in the further declining of unemployment rate. Remember that the most recent NFP data, non-farm payroll data being released, okay, there was actually a lower than expected unemployment rate data being released, okay, which is really, really positive for the US employment market, okay, the jobs market. All right. So press conference will also be taking place at 0230. Now, keep in mind that last Sunday there was this US and Canada's daylight saving. Okay, so prior to last Sunday's daylight saving, okay, the US markets open at 2030 GMT plus 8. Okay, but post the daylight saving, okay, right now the US market opens at prior to the daylight saving, okay, the US market opens at 22:30 GMT plus 8, okay, 22:30 GMT plus 8, which is 10:30 p.m., okay, GMT plus 8, okay, but right now, post the daylight saving, okay, US market will open at 21:30 GMT plus 8, which is 9:30 GMT plus 8, okay, so keep in mind with this. And of course, as usual, the previous FOMC meetings were held at 3, okay, in the morning, GMT plus 8, but then right now it's shifted earlier by 1 hour because of daylight saving, okay, so it's 2 GMT plus 8, and press conference will be held 30 minutes later at 2:30 GMT plus 8, okay, in the morning. All right, so during the press conference, expect volatility for sure, okay, expect volatility on the in the US dollar, okay, because Jerome Powell will be answering journalist questions, the reporters' questions and things like that on potential more rate hikes coming in, and their current view of the Russia-Ukraine tension going on and how it can possibly impact the the central bank's decision in the future. All right, so that's for the FOMC prep. Okay, any questions on this prep? In case of no hikes, would that be positive for equities? Yes, it may actually be positive for the the equities market. So we may very well be seeing the major indices, the major US equities indices, the S&P 500, Dow Jones Industrial Average, Nasdaq 100, to actually gain some strength, okay? And of course, the US dollar will take a bit of a hit, all right, from the no rate hike, which, to be honest, I think it's going to be quite a surprise, okay, the no rate hike situation, okay, and it will be, well, the US dollar will take quite a bit of a hit from that result, okay. So if there's no further questions, let me move on to the next central bank announcement, okay, the Bank of England, all right. Similarly, the Bank of England will announce their monetary policy decision tomorrow, okay, at 20:00 GMT plus 8, okay, 8 p.m. GMT plus 8. Now, during the previous meeting, okay, the Bank of England carried out an interest rate hike of 0.25%. Okay, so right now at the moment it's at 0.5%. Okay, interest rate in the UK is 0.5%. All right, and it was actually pretty hawkish, I would say. Okay, because out of the 9 voting members, 5 of them voted for a rate hike of 0.25%. 4 members voted for a rate hike of 0.5%, which is, I would say, a close shave. Okay, if one more member were to vote for 0.5%, then we will be getting a 0.5% rate hike instead of a 0.25% rate hike. Okay, hence it would have been a more hawkish rate hike from the Bank of England. Okay, but it's okay. At least now we know that probably around close to half of the committee members are actually rooting for a more hawkish rate hike. Okay, but that was all before the Russia-Ukraine war. Okay, so a bit tricky over here. Now, okay, with this whole war going on, the current meeting, well, previously we were actually thinking like, although there wasn't a 0.5% rate hike, okay, we can expect one in the upcoming meeting, okay, given that, we have close to half of the committee members expecting a more hawkish rate hike. But right now, because with this whole uncertainty going on, sorry to tell you guys, okay, that it is unlikely, okay, that the Bank of England will be carrying out a 0.5%. Okay, so at the moment, the expectation is for the Bank of England to carry out a rate hike of 0.25%. Okay, from 0.5 increase to 0.75%. All right. So a 0.25% rate hike is the expectation at the moment. Okay, in a scenario whereby a 0.5% rate hike is being carried out, now that will be considered a hawkish rate hike. Okay, that will definitely be very positive for the British pound. Okay, and no rate hike, okay, is a situation that no one is expecting from the Bank of England. Okay, for whatever reason, in a scenario whereby the central bank, the BOE, decides to hold it unchanged, okay, they are probably out of their mind. Okay, we will definitely be seeing very, very, very likely be seeing a strong weakening of the British pound, across the board. Okay, for whatever reason, I can't think of any reason right now that the Bank of England will keep an interest rate unchanged. Okay, no matter how uncertain this whole war is injecting into the global economy, a 0.25% is still the minimum rate hike that the Bank of England will be carrying out. Okay, so rate hike wise, it's pretty straightforward. Okay, 0.25% is the expectation. A 0.5% will be a good one. Okay, a good one for the British pound, and no rate hike would be crazy. Okay, it will definitely cause a strong weakening in the British pound. Okay, for the Bank of England, my concern, okay, would be more on the communication, okay, that the Bank of England were to provide, either through the press conference or through the interest rate statement. Okay, so two main things that I would like to focus on in terms of the communication. The first one is the ongoing war. Okay, with the whole war, moving on and progress being very uncertain and things like that. Okay, can we expect any more rate hikes in the near future from the Bank of England? Okay, so if the rate hike were to be carried out tomorrow, okay, then this will be the third consecutive rate hikes from the Bank of England. Okay, although it's still quite far from the pre-pandemic level, I would say, in terms of rate hike. Okay, in terms of interest rates level. Okay, in UK. All right. Because of this whole uncertainty, the central bank, the Bank of England, and actually, to be honest, the other major central banks as well, they may actually take a pause from time to time, okay, and evaluate and probably wait for any further developments from the war to take place before considering any further rate hikes. Okay, which is why one of my main focus is to know whether the Bank of England is still confident that after the March rate hike, the central bank will carry out further rate hike, maybe in May. I think the next meeting is in May, if I'm not wrong. So in a way, it's good for the Bank of England, as in, they have like 1 month of buffer, April, okay, for them to, sit back and relax and, see how the whole Russia-Ukraine war develops, progresses, and before making any monetary policy decisions. Okay. Yeah, if I never remember wrongly, it should be in May that the next meeting after March will take place. Okay, if not, April will be if it takes place in April, then you'll be quite stressful. Okay, for the Bank of England. Now that's the first thing. Okay, what's their view on rate hikes given the ongoing war? Okay, the second main thing that I would like to pay attention to is the plan for corporate bond sales. Okay, remember that QE has ended already. Okay, QE, I think it was I can't remember when was it that it ended. Okay, but right now, okay, what we are interested in knowing is, when will the Bank of England be will be unloading the bonds back into the markets. Okay, so that is something that during the previous meeting, there was actually a unanimous vote for the unloading of bonds to take place as soon as possible. Okay, unanimous vote meaning all 9 voting members voted for the unloading of bonds currently held by the Bank of England, okay, into the market as soon as possible. Okay, so as soon as possible and unanimous voting, I believe this time around there will be some information on that. Okay, perhaps information on the pace of selling back the bonds into the market. Okay, or maybe when should it start? Because to be honest, with this unloading of bonds and interest rates going on, okay, the Bank of England may very well pause interest rate hike in the near future, okay, and adopt the unloading of bonds first. Okay, that is also another kind of that's also another way that the Bank of England can actually take up monetary policy tightening. Okay, we do not have to increase interest rates, we just have to unload our bonds first, okay, reduce our holdings of bonds, and then we see how it goes, how the whole uncertainty, the war develops and progresses and things like that, okay, before deciding if we should carry out another round of interest rate hike, and if so, at what level, okay, in the May's meeting or in the June's meeting, and so on and so forth. Okay, so two things to pay attention to in the interest rate statement and the press conference from the Bank of England. First thing, with the ongoing war, can we expect any more rate hikes in the near future? Okay. Second, what's the plan for corporate bond sales, since you guys voted unanimously during the last meeting that you guys should be unloading the bonds as soon as possible. Okay, so with that, that is the prep for the Bank of England's monetary policy meeting. All right. Trading opportunity wise, there will be plenty. There will be plenty. Okay, if you guys cannot make it for the FOMC, because it's too early and things like that, then wait for the Bank of England. There will definitely be trading opportunities. All right. So any questions for the FOMC and the BOE prep for tomorrow? Okay, if there's no questions, I will hand it over to Scott for his analysis on the DXY. Over to you, Scotty.
All right, thanks for that, Kimmy. And if you did come in late, don't forget that we do upload this whole video as well ASAP into the LCMS Trading Club chat room as well. So make sure you review that video if you need to, if you missed some critical points. Now, with the US dollar index, and I actually was looking at the Brent crude price as well just before, which has taken a little bit of a downturn as well. So US dollar, I'll start with the daily chart here now. And we are still trading over that 98.23 support level. We are just starting to sort of creep down a little bit lower. If we have a look at the 1 hour time frame, and ever so slightly where, well, we are range bound, and it's probably very ambitious to say we're going to start tracking down, lower there, especially with what's coming up later tomorrow morning, very early our time, GMT +8. So we've seen a little bit of support down at 98.70. That's going to be the first point of interest here, because we don't have a lot of news out until we do have the 2 a.m. meeting that is with the FOMC. What I will do is just go to the news now and just have a little preview of what is actually coming up today. So we did have for Tuesday evening, GMT +8 time zone, we had the PPI come out month on month, really not a huge miss at all, 0.8%. So still quite close to the 1% expected. And then we had the core PPI at 0.2%, a little down on what was expected. But as you can see, really the US dollar is quite choppy, but still, nearly at 99, which is, quite high from what we've seen recently. Now we do have the core retail sales. We also have the retail sales as well later today. That's at 8:30, GMT +8. And we are expecting a little bit of a lower figure from the previous month as well. So we've got 0.9% expected and 0.4% for retail sales. Then you can see come 2 a.m., economic projections are coming out, and Gim did mention what to look out for there. So make sure you do review that video before this comes out. If you are trading around this release, I won't be. It's quite early, so I don't think I will be. And then we've got the FOMC statement. So it's all 2 a.m. We've got the press conference, and just definitely be wary of that. We do have an expectation of what's going to happen with rates, but we'll see. It's there's been a lot going on, but the highest expectation is that 25 basis point increase. So if we do see a miss where it's not done, or if we do see a higher increase, then that's where we're going to see a lot of volatility around. So if we go back now to the US dollar index, just a little bit to pay attention to. So with the Ukraine situation, what's been interesting to see is the Brent crude oil prices. While that has come down on the 1 hour, you can see really it's been sold off pretty heavily, just a daily chart. So it's just saying that tensions are de-escalating a little bit. There's still a lot of unknowns, and you can see that on this daily candle, we have seen a little bit of a bounce, but it's just a wait and see now. And oil and gold as well have eased lower. So that's the gold chart, which is actually similar to oil. Obviously, there are different dynamics going on with oil, and the fact that Russia supplies a lot of Europe, and now Europe are really going to have to make some efforts to get other sources, and that's going to take time. But for now, if you are looking to trade with, you know, the oil price moving and the gold price moving, just be cautious. We've got a meeting later today with Ukraine and also Russian officials on exactly how they're going to come to a ceasefire. But the situation is, it's difficult because both parties want certain things, and they've got to continue to negotiate, it looks like. So there's no conclusion here that I can see for a little while. So be cautious there. And just finally with the US dollar as well and how it's been moving, I would say that I'd prefer to see a little bit of a pullback, but I'm realistic with, you know, 98.70. We could see that trickle down and hold sideways until we get that release. And then obviously during the release is when we'll probably see a great deal of volatility. So be mindful of that. If you want to trade around it, I will just wait and see how the market's digested and then come in, you know, tomorrow on the call and just see what has played out. But it's definitely going to create some, you know, a decent amount of a catalyst to either move higher or lower, or we could just see it hold sideways if it's 25 basis points. And that's, to me, it's looking like that's priced in. So for now, there's no immediate trade idea. I'll wait to see what it's looking like this time tomorrow before really honing in on a shorter term trade idea, that is, for now. But those are my thoughts there, guys, on the US dollar. Now, we've just got, Gim, are you going over the pound and the euro pound as well for any trade ideas?
Yep.
All right, I'll hand it over to you now, Gimme.
All right. Okay, pound dollar. It's going to be a bit tricky from now until the release of the FOMC decision. Okay, so at the moment, all right, we can see that, just zoom in. Okay, pound dollar is actually trading in between, okay, this support of 1.3 and resistance of 1.31 over here. Okay, I wouldn't say there's any immediate trade opportunities right now, okay, because if you guys realize, all right, usually the day before the release of the FOMC decision, okay, that tends to be, I would say, you know, a consolidation, or, you know, I wouldn't say retracement, a consolidation, okay, a ranging situation going on, all right, unless there's something that is, you know, is out of the blue, okay. It can be further developments in the Russia-Ukraine war and things like that. That may actually cause a move in the pound dollar, okay. Otherwise, if everything is as it is, okay, there's no surprises from now until the FOMC, then, you know, currency pairs, major currency pairs, will definitely be what do you call that, consolidating and ranging across, okay. So if you can see that, you know, since the pound dollar is currently trading between the resistance and support zone, I would say that both buying and selling opportunities are fair game, okay. Only once the FOMC decision is being announced, okay. Now, in a scenario whereby, you know, we see, like what I mentioned just now, okay, we see a 0.25% rate hike, by the central bank. Okay, the US dollar may actually strengthen briefly, but not likely going to be sustainable. Okay, then we can actually be expecting pound dollar to go lower. All right, and keep in mind, pound dollar is actually quite low already, right? If we were to look at weekly chart, okay, we can see that it's very low. Let's just go straight to the weekly chart. You can see that the last time we actually traded this low was back in 2020 November. Okay, so it's really, really very, very low at the moment. All right, and right now, if you guys were to enter a trade, chances are it's just going to remain at that level. You will neither hit your TP nor your stop loss. Okay, but if you guys were to wait for the FOMC decision, okay, 0.25%, we can actually expect pound dollar to move lower. To move lower. Okay, towards the support of 1.30. Okay, we probably have I'll probably keep my trade short term for at most a 20 pips take profit. That's all. All right. Now, in a scenario whereby the FOMC were to carry out no rate hike, okay, then we can expect the pound dollar to actually trade upwards closer to towards the resistance of 1.31 level. Okay, so basically we just have to wait for the FOMC announcement before we can look for trading opportunities in pound dollar. All right, then if we were to move on to the next pair, euro pound. Now this is different. Okay, I would say that although the US FOMC decision has little to do with euro and pound, okay, I mean no direct relation, okay, there is still some indirect relation. Okay, it may actually be cause some movements in euro pound as well. It can be due to people switching positions, the large financial institutions closing off their euro pound positions and things like that, or euro or even pound positions for for other positions to open up new positions and things like that. Okay, and that will indirectly cause movements in euro and pound. Of course, depends on which direction they decide to take euro and pound. Okay, and if they were to hold euro unchanged and then take up more pound, then we can actually expect euro pound to go lower. Okay, but nonetheless, okay, euro pound, the main focus will be tomorrow's Bank of England. Okay, at the moment, euro pound is actually trading at the support of 0.84. Okay, it tried to break yesterday, but then it kind of consolidated a bit. At the moment, I would say that okay, because the Bank of England is expected to hike interest rate by 0.25%, and they may hike 0.5. Okay, and of course, I would say in terms of monetary policy wise, Bank of England is definitely ahead of the European Central Bank. No doubt, the European Central Bank recently has just sent out a hawkish tone and things like that. Okay, but they are still behind. Okay, several steps behind the Bank of England. Okay, the Bank of England has already ended QE. Okay, the European Central Bank is hoping QE can be ended during the third quarter of 2022. Okay, still quite a while from now. All right, and the Bank of England has already hiked interest rate by 2 times and is expected to hike the 3rd time tomorrow. Whereas the European Central Bank, there's some hope in rate hike from the ECB this year. Okay, so yeah, basically the European Central Bank is just still behind the Bank of England. Okay, now in a scenario whereby the Bank of England were to hike rates, okay, be it by 0.25 or 0.5%, we can actually expect the euro pound to break this support level of 0.84, okay, and go lower. All right, now in a scenario whereby euro pound were to break below this support of 0.84, okay, then our stop loss can be placed above. Okay, a sell entry can be taken up and stop loss can be placed above, just like this indication over here. Okay, the stop loss in this case is at it's around 75 pips. Okay, 75 pips above. Okay, and then the take profit would be just before, okay, just above the next support of 0.835. Okay, so you guys can actually wait for, let me just put a line here. You guys can actually wait for this level over here to be, for pound dollar to trade below this blue level. okay, before what do you call that? Before looking for any selling opportunities just to play safe, okay? Because it tested to break the support, but it failed, okay? And it bounced off this level of around 0.839. Okay, I would say 0.84. Let me just change it to 0.4. Okay, sorry, not 0.39. Sorry, I think it should be 838 because it's too many lines cluttered around here. So, you know, it's get a bit hard to see. 0.838. Okay, 0.838. For those of you who are more cautious, conservative, okay, I will wait for Euro pound to trade below 0.838 before looking for selling opportunities. As usual, your stop loss can be placed above this resistance of 0.84. Okay, and the potential take profit level can be placed before the support level of 0.835. Okay, so is it 835? Let me just, yeah, 835 level over here. Okay, so Euro pound I will still be waiting, mainly for the Bank of England's decision before taking up the trade. Okay, in a scenario whereby Euro pound were to fail to actually break this support level, okay, then we can actually look for buying opportunities. But I won't do that right now, okay? At least if I want to do that, I would wait for the Bank of England's decisions to be announced tomorrow before looking for any potential buying opportunities on Euro pound. Okay, if let's say the Bank of England were to disappoint, yes, that gives us more conviction to buy Euro pound. Okay, and that's one thing. Another condition is that the Euro pound must be trading above this support level, okay, of 0.84 before I'll be convinced to buy. Okay, buy up to the next resistance level. All right, and of course, with the ongoing uncertainty caused by the war, okay, Euro and pound, both Euro and pound being the risky currencies, may actually go either way. Okay, to be honest, we won't know which is more riskier than which at the moment, and it really all depends on how the market to react to the news and things like that. Okay, so at the moment, I would say stay out from Euro pound first. Okay, just wait for the Bank of England's decision tomorrow before looking for a decision. Okay, and then as for pound dollar, of course, you have to wait for Bank of England, but the most immediate pressing issue, I would say, okay, is the what will the Federal Reserve be carrying out, a 0.25 or a 0.5% rate hike? Okay, so I'll wait for the FOMC to make its decision before looking for opportunities in the pound dollar. Okay, so at the moment, do we have any questions on the trade idea? Okay, no questions on the trade idea. With that, all right, I will see you guys tomorrow. And if you guys, tomorrow is Thursday. Okay, great. Tomorrow is Thursday, right? So I'll be covering what went down during the FOMC meeting tomorrow at 0200 GMT +8. Okay, and with that, I will hand it back to Scotty.
All right, thanks, Kim. And that's right, everybody. Make sure you do catch tomorrow night's live trading call as well. And I hope everyone has a great session today. And don't forget to join the club, or if you're already in, please feel free to share any ideas, and we're happy to help answer any questions. Thanks for joining us. Hope to see everyone tomorrow. Bye for now.